I am Charlotte McLeod with the Investing News Network, and here today with me is Rob McEwen, Chairman and Chief Owner of McEwen Mining. Thanks so much for being here today.
Happy to be here, Charlotte.
Great. If we last spoke, I think after the end of Q1, you'd have had a little bit of a difficult first quarter. Now we are after Q2. How did that go for you? How are you doing now?
Well, Q1 was a struggle. Q2 is a little bit better. The rest of the year, we've got all the issues that plagued us in the first and second quarter behind us. So operations are going to be doing much better in the second half. And we have a very aggressive exploration program, so there's going to be a constant stream of news between now and the end of the year. There'll be some resource updates. There'll be a new feasibility study or two. So there's a lot of good things happening in the second quarter, including a higher gold price.
Right, yeah, and I've heard a lot of optimism. We're here at the Sprott Natural Resource Symposium. People seem optimistic about where gold is going to be heading. What are your thoughts as we finish up the year?
Well, we're at a 6-year high right now.
Yep.
I think we're going to be going higher than where we are. There's a chance it could be pushing up into the 1700s for this year. You've got a number of factors coming into play. I mean, there's a growing number of sovereign debt bond issues that are negative yield, which is extraordinary when you think, why would someone lend money and expect to get less back? But that's where we are. The economies, while we're at full employment in many places and it seems to be moving, the broad market or the broad industry background isn't moving as quickly. There are a few stocks that are dominating it in the Dow and the S&P. And I also think yourselves and others will be broadcasting to the public and saying, you're missing something. In the last 3 years, the Dow's gone up, say, mid-50s, 56% or so. The S&P's up in the high 40s. Gold's only up 35, so that's US dollars, and they're not really looking at that. But if you look at the GDX and the GDXJ, they're up over 100%. The senior gold stocks have outperformed the Dow by more than 100% in the last 3 years. And as the media, I think, sees more of that, there'll be people coming into this space, and I think it's more likely that gold stocks could double from here and gold could double from here than the Dow going from its current just under 27,000 to 54,000.
And we often hear that silver will move along with gold and usually more extremely. You also produce some silver. How do you see the silver price moving?
Exactly like you said.
Okay, all right, there we go.
Silver there's a fairly high correlation between the move of silver and gold. So in other words, when gold's moving, silver's moving. Right now, the exchange ratio, it takes about 90 ounces of silver to buy 1 ounce of gold. And in a strong market, it's gone down to 30 ounces of silver buys an ounce of gold. So if we get a gold market, I would expect that exchange ratio to compress from the current 90. It might go to 60. And if you're in a really strong market, it might go back to 30. So that's a huge swing in the profitability of mining silver.
For yourself as a company, how would you expect that upward momentum to affect you? Is it already affecting you already?
Yeah, I think it would expect that impact us very positively. One, because we have a high beta. According to Bloomberg, we have one of the highest betas of any gold company. So, and a beta just means that if you have a beta of 1, you move at the same percentage. So if gold went up 1%, you'd expect the stock to go up 1. But if you had a beta of 3, which we have, you would expect we would increase 3%. Now, it's a double-edged sword because when gold goes down, we go down more than gold. So for any of your listeners and viewers, we are not a conservative gold investment at this point. But I can say I have a big investment in it, and I'd like to see a higher price, and I don't want to dilute our shareholders. But my investment in the company is now $164 million US, and I take $1 a year in salary, and I don't take any options, and I don't have any bonus paid to me. So I'm right there with every other shareholder.
Okay, that's great. And so, looking at the market, we spoke earlier this year about mergers and acquisitions. That had been a big trend, and you mentioned the next step for that should be divestments and who's getting those assets. Are we starting to see that happen? Is that still something we should watch? Should we be looking for more M&A activity?
You should expect more M&A. I think the market is too fragmented right now. There's so many stories out there, no one really knows where to turn.
So we still need that activity.
We still need that consolidation. I think the majors were selling off properties to build funds to pay down their debt. With this higher gold price, they might be a little slower now
Right.
to dispose of those properties. And there'd certainly be more buyers appearing at their doorstep saying, well, if you're selling that, we'd like you to consider our bid.
Any other trends that we should be watching in gold as the year continues? What are you seeing?
I don't know what it'd be. Well, gold will start reflecting the marketplace and the concerns of the marketplace. One area that no one's taking a lot of look at is pension plans.
Okay.
And pension plans have promised a certain return to their pensioners. But right now, with low interest rates, they're not able to generate the returns. So I think you'll see more articles saying, you know, those pension plans, they're not going to deliver what you were expecting. And you've seen people take more and more risky investments to try to get the return. There's over $13 trillion of government debt that is now negative interest rates. So, and that's what's happening to the pensions. And even life insurance companies will have some difficulties because they're not getting the type of return on their investments. So it's concern about that. You've got an election coming up. You've got all sorts of geopolitical turmoil going on.
Yeah, so lots of things to watch in terms of factors that could influence. Is there anything that could throw us off the upward trajectory that we seem to be on for precious metals prices?
It's a good question.
Right.
We've had false starts in 16. It ran and then it stopped. Then we had a bit in 18 and it stopped. Will this be sustained? Well, what I can say is we're getting lower and lower, or higher and higher lows.
Yeah.
So that's a positive sign. The trend is up. And I would expect we'd see more of that. And if you wanted to look at where could the gold price go, if you looked at the first run after the gold window was closed in 1971, gold went from $40 to $800, so 20x. And then from the lows of 1999 and 2001 of $250, it went to 1900, so 7x. Now I have a chart that suggests that gold one day will buy the Dow, and it's 123 years of history where it's gone down to that point where either 1 ounce or 2 ounces buys the Dow, and that's happened 3 times. So if you were to think about it for a moment, the Dow is almost 27,000, so could gold go up to $27,000 and the Dow just stays up there, or does the Dow fall to 1,400, lose 95% of its value, or is there some place in between?
Right.
And in between is about $14,000. And if you looked at these factors, the 20 times and the 7x on the current gold price, you're looking between $8,000 and what might seem outrageous, $21,000. Just looking at that. So I think we're halfway through this bull market. The second half is quite exciting. That's where you get the big movements in price, up and down. So I'd say, hold on.
All right. Any final thoughts you would want to leave investors with as we close up?
Well, if I think about McEwen Mining, I'd say, one, there's a large short position in our stock, and in a rising market, that might put a squeeze on the shorts. 2, we disappointed the market in the first and second quarter, and it was reflected in our share performance relative to the GDX and the GDXJ. So I think as the second half progresses, we're going to see an improvement in our performance, and maybe the market will give us back the premium that it used to give us. And that would close the gap between. And And then we have all sorts of exploration news coming out that I think will encourage the market.
Okay, well, that's great. Thanks so much for being here today. It was great to talk to you.
Thank you, Charlotte.
Thanks. And once again, I'm Charlotte McLeod with the Investing News Network. This is Rob McEwen of McEwen Mining.